Are real estate housing prices going down? And if they are, have we been in a bubble and will we see a crash the way we did in 2008? And how much might housing prices go down? Welcome to this ML forecast video, where we will share forecasts based on historical data, algorithms, and machine learning to try to answer these questions. 30-year mortgages have been moving up significantly, to levels we haven't seen since the great financial crisis in 2008, when we had the last real estate bubble and crash. This was brought on by the Fed raising the Fed funds rates just as they are doing now. Given this, the question is whether we will see another crash. We will look at 4 models from the ML forecast, starting with 2 using profit. The first profit model, with data starting in the 1960s, shows us that the actual housing prices, shown as black dots, are significantly higher than the implied forecast, shown as a blue line. Current housing prices are too high according to this model. Quarterly data from the Federal Reserve has the median sales price of houses sold in Q4 2022 at $467,000. The monthly data peaked in October 2022 at $491,300. For the second model, we reduced the time horizon to start in 2010, after the last downturn. It also shows a potential drop following current high prices. These 2 models predict a potential drop of up to approximately 15% or $67,000. Next, we look at 2 machine learning models. The first uses linear regression and the second a random forest algorithm. For the linear regression model, data starts in 1971. For both the machine learning models, we will also use 30-year mortgage rates, which, as we just saw, are going up, the personal savings rate, which has been going down, meaning people are saving less, and personal credit debt, which has been going up, meaning people are taking on more debt. This makes these models more complex than the first 2 profit models, which were time series models. So, for the linear regression model, we see housing prices, using the blue line, have gone up significantly since 2020. The red line shows the forecast and it drops precipitously in 2023. It would imply an approximately 22% or $101,000 drop in housing prices. In the fourth model, the random forest model, it shows a smaller decrease than the other models. It also considers the additional variables such as mortgage rates, personal savings rates, and personal debt. This model shows an approximately 9% and $42,000 decrease in housing prices. Not as severe as the prior 3 models. We could run additional models and variations on these models by changing what dependent data we include, historical data, and changing the algorithms. For this video, we will stop here. We may look at different models in the future as we revisit housing prices. Now let's summarize the data for the 4 models we discussed. We noticed that the forecasts are fairly consistent in suggesting housing prices will go down in the shorter term and then potentially regain their upwards trajectory over the longer run. The R-squared score implies that the random forest model is the best at predicting historical data. It does not guarantee that the forecast will be accurate but provides a way to compare between the models. Overall, the models suggest housing prices could drop anywhere from around 9% to 22%, which would mean somewhere between a $42,000 to $101,000 drop from Q4 2022 prices. Thanks for watching. If you liked this content, please like and subscribe. For additional information, consider visiting our website at mlforecast.com. Please note that I'm not a financial advisor. These videos are for educational and entertainment purposes only. No forecast is guaranteed. Do not use this information to make financial or investment decisions. For that, talk to a professional financial advisor. See you next time. And now the disclaimer.